Hey Zingers, it's Dan Leach, and I have a wonderful guest for you today. It's Steve Schaufstall, the Director of ETF Product Management for Sprott Asset Management USA. Steve, so great to be with you.
Great to be back, Dan. Thanks for having me.
Hey, the pleasure and honor is all mine. Let's talk about Sprott launching a new active gold and silver miners ETF. What can you tell us about the strategy?
Yeah, we're really excited to bring the Sprott Active Gold and Silver Miners ETF to market. Ticker is GBUG, or as we refer to as GBUG. It's the only active ETF that's dedicated to gold and silver mining equities. The fund's going to mainly invest in mining, exploration, development, some streaming and royalty companies that are focused on mining gold and silver. We do have an allocation of up to 20% or so to other precious metals like platinum or palladium, though we expect that percentage to be relatively muted. It really is, primarily a gold fund, as referenced in its name, with a pretty sizable allocation of silver as well, which is currently somewhere around 10% of the portfolio.
Awesome. Well, let's talk about GBUG. What should investors know about GBUG's selection process?
Yeah, so this is one of the areas where our expertise as a firm really comes into taking shape into an active strategy. Our investment team has over a century of experience investing in the miner space. We actually also have an economic geologist on the team, which comes in handy as the investment team does up to 30 site visits a year. So not only are they going to the site and talking to senior management and that C-suite level of management, they actually talk to hierarchies throughout the organization. So as they're looking at these sites, they're really getting an understanding, a 360-degree view of not only a company in general, but also in specific operations. Given all that experience that they have in the industry, our investment teams cultivate very deep relationships. They do over 200 management team meetings a year. This really gives them a feel for management structure and management capability. And so this all feeds back into their view on different stocks. So they're looking at things like financial metrics, capital needs, management structure and capability. And then they also have a sensitivity model that they'll run where they'll start looking at how the changing prices of gold and silver could impact a company, what their costs are, taxes, things of that nature. So we think it's a really all-encompassing type view that the team takes, and bringing all their experience to the table is putting out their strategy, which we firmly believe in.
No, it's exciting stuff. And listen, as you all know, gold obviously has been moving higher in recent years and is near record territory. What is driving the gold prices higher, Steve?
It really comes down to the fundamentals. If you start looking at major discoveries, we're just not really seeing that on a level that would keep production at the high rates that we're seeing. We do see companies are spending at record or near record amounts in trying to find those new discoveries. But at the same time, as we're not finding those large quality deposits, we see ore grades are declining, and there's not really enough quality deposits to keep pace with current prices of gold. So even though we've seen a large run up in the price of gold in the last few years, to maintain these production levels, it's likely that we'll have to see even higher prices. And then also, one thing to note on silver, because it is an important part of the strategy, it benefits from being both a precious metal and an industrial metal. About 55% of the fund is industrial based. A lot of what we see is coming from solar panel growth. So over the last 10 years, since 2015, solar panel demand for silver has actually increased by about 28% per year. So very significant growth that we see in solar panels now makes up about 16% of overall silver demand. And at the same time, when you think about silver and the fundamentals of silver, it is a little bit more unique than what you see with gold because it is largely mined as a byproduct metal. About 72% of silver comes because miners are mining something else. So that makes it much more difficult for miners to really scale up production because silver may not be their main driver of revenue. So they're focused more on things like copper, zinc, or lead.
And now a big question when it comes to gold, why may investors want to add exposure to gold miners to their portfolios?
Yeah, so as a precious metal, it gives a lot of characteristics of diversification that can provide some protection to a portfolio. When you start looking at correlations to major asset classes like the S&P 500, the broader bond market, you'll see that there's a low to moderate correlation. When we look at the US dollar, we actually see a negative correlation. And then speaking of the S&P 500, this strategy really is a value and contrarian play at its core. When you look at how gold mining equities are priced relative to the S&P 500, they're actually about 40% cheaper. We see they tend to have higher profit margins, about a 50% higher yield. They have less debt on the books and they're less levered. And I'd say finally, as we start looking at the prices of gold miners, and another reason why we think they are undervalued, if you look at the earnings expectations, not only the growth that we've seen historically, but for the next couple of years, you just see that the price of the mining equities hasn't really kept up with the growth in earnings. And we think that's another reason why the gold equities have been underappreciated and maybe due for some outperformance going forward.
Definitely a good time to get involved. And Steve, I know that Sprott offers 2 passive gold miners, ETFs. Why may investors want to consider an active strategy right now?
Yeah, so the GBUG is our most recent precious metals ETF. It is our third gold ETF. We have SGDM, which focuses on the all cap space, SGDJ, which is our junior miners. We also have a silver miners ETF that we launched about a month ago, which is a passive strategy based on silver miners. It's another one that's the only of its kind from a mining of silver ETF strategy. So the interesting thing about the gold space in general is, if you look at allocations to gold, there's really 3 different routes you could go. You could go physical, you could go passive, you could go active. We're proponents of having that physical allocation to portfolios. We think it gives you characteristics that you don't see when trying to diversify with other equities or even bonds, given their low correlation to gold. So by having that base exposure to the physical equity, it also gives the opportunity then for investors to decide if they want to layer on top of that equity exposure. And usually what you see with gold and silver miners is that over time you expect to see a leverage effect to the underlying commodity. So by overlaying an equity strategy onto a core physical holding, you have the possibility to increase your return potential. And then the question really comes down to active or passive. And from our perspective, we really don't have a view on what's right versus one strategy versus another. What we like to do is provide investors opportunity. When you look at an active strategy, the goal there is to outperform the broader market by picking stocks that you would expect to outperform a market cap based strategy. For investors that are comfortable taking active manager risk, that could be an attractive option. There is a significant amount of investors that prefer a passive approach. They prefer a strategy that might be much more broad and a little less targeted and don't want to take on that active manager risk. And for those investors, a passive strategy might make sense.
Very, very smart. Steve Schaufstahl, the Director of ETF Product Management for Sprott Asset Management USA. That was an absolutely fascinating conversation. Thanks so much for joining me today, Steve.
Happy to be here. Thanks for having me.